All right, we got some folks in the house already. Maxwell Davis, thank you for being here. Rebecca Carr, appreciate all you guys. So we are going to do a tutorial here with Tim. He is the LUX ALGO master, and we're going to be looking at the oscillator matrix. I would say that you need to be taught these because you can't look at them and just figure it out. There's a lot of dots and lines, and Tim's taken the time. He's processed it like the big mama bird. He's chewed up the worms. He's coming to feed the family. we need to get this down so that we can learn to incorporate this and make big bucks, Tim. We are here to change people's lives, and that's through education. I mean, I've said it 100 times. Learn, test, then execute. And I'm going to tell you guys right now that if you get your confidence up because you actually begin to figure out how things work and you understand how to read these technicals and you start making consistent daily wins, it will change your life. It will become the most exciting thing because you will finally turn Wall Street into an ATM, into your own personal cash printing machine. This is the journey that I've been on, but it's a journey that has to be mastered. And the number one problem is that when you are looking down that road towards what I would call Wall Street's cash city, there's someone in the road and they're blocking you and they're angry. And it's you. You are your biggest problem. Attitudes towards money, fear, and FOMO, they stand in your way. And the sooner you begin to process these feelings and these emotions and you get control of them and you begin to use disciplines, that's when the lights begin to turn on. Confidence level goes through the roof and you start making money on a daily basis. That's why we're taking the time to learn this with Tim. And so Tim, tell us a little bit about that. Let's keep it concise, to the point, and like you're talking to third graders. Thank you again for being here.
Yeah, absolutely. All right. So today we're gonna talk about the oscillator matrix. If you want to share my screen here, Josh, this is the most potent tool that I use for entering trades. It's not the only tool I use, but you're gonna want to make sure you have the oscillator matrix. I'm gonna make it full screen so I can show you the different parts of it. But it's broken down into communicating three very important things that'll help you trigger and know when to enter a project, enter an assets trade, whether longing or shorting. Before I get into the three details, I want to point something out to you guys that some of you might find very useful. I don't use it because it's kind of a lagging indicator, meaning by the time it pops up, it's not very useful to me. But if you see these bars above and below, notice there's different colors. There's green bars on the top, red bars on the bottom. All that's being communicated is if the color flashes bright, that means we're either, if it's green and above, we're in a confirmed bullish trend, bullish momentum. And if it's bright red, it's very confirmed bearish momentum. If the color is faded, you're going to see a lot of times you'll see both faded. That simply implies the market is under indecision, meaning we're not really sure if we're bullish or bearish. If it's dark gray, that means we're not bullish at all. And oftentimes you'll see the dark gray on the green correspond with the bright red, and then vice versa, the dark gray on the red corresponding with the green. Again, I want to explain that. That tells you, are you bullish or bearish in terms of trend? But again, you'll
Tim,
notice here, good.
first of all, very good intro. Let's
Yep.
go super slow. Let's take the first part of what you shared, just the bright
Yeah.
red and the bright green, and let's talk. Okay, so we're looking at the Ondo chart, and so let's just break down that first bit of information. So we're bright red on Ondo. I've covered
Yes.
Ondo over the last week, and I told everybody, time to lock in profits, time to take profit, time to raise your stop loss. And since then, we've gotten a confirmed downtrend, pretty strong. But now, now we've been in that bright red, okay? And do we wait until we begin to see some bright green? Do we think, okay, well, maybe this is, how do we interpret the exact spot it's in? It's bright red. We got a little green
Yeah.
dot beneath it. How do we interpret this?
Okay, so here's a great example. Let's take a look here. If I compare the price action, this is the 4-hour chart on Ondo, but let's go back to where we were bright green, right? So dark green and dark red simply means, hey, we're not really sure what the next move is. So bright green is bullish. Look when it turns bright green. we still had a little further to go to the upside, but as a whole, you would have missed out on all of this bullish opportunity, right? And then we go to the top and it's still bright green, and we stay light green until all the way down here, in which case if you had bought on the light green and sold when it leaves, you would have bought and sold the exact same level. That's not very helpful to me. Now the price starts to move down, correct? We don't turn red, bright red on this graph until we've had a very significant downward move. And currently, while we would be in profit if we had entered a short trade here, we're still very bright red. And I can go ahead and tell you guys, more than likely, if we entered right here, we might not stop being bright red until the price of Ondo probably is right back up here at $1.21, the same level that we entered this trade on. So it's a lagging indicator that does communicate bullish or bearish trends. But like I kind of started, I wanted to explain it to you so that you understood. I don't think it's very helpful information, if that makes sense. What I like it for is visual representation of when the oscillator is either high and what we call overbought, meaning it's very high and should probably correcting over the downside, or for when we're very low or oversold, and we probably should be looking for a correction very soon to move back to the upside. It just gives me a quick visual representation of where the 0 line is and where the 100 line is on the oscillator.
Okay, so we don't want, it helps, but we can't trade off of it by itself.
Right.
So we have to use it in conjunction with some other aspects of the oscillator. Now, let's break down those other aspects, because the green dots I know are pretty important. And I also know that you've talked about the bright red in the cloud as when you see that, you know that selling is accelerating and coming near an end. When at any point, so if you're looking, I'm going to always be looking at other indicators, but then I'll come here and I'll check this. And if I see that bright red and I'm already thinking that we're nearing support, that could be a signal to me to begin to scale into my position. How would you interpret that?
Right. Okay. So let's kind of start off by just addressing what I consider to probably be the most important aspect of this oscillator. And what Josh is talking about is specifically the bright red right in here. And then if you find a season of bullishness, all right, there's no example on this chart. If I were to go to a daily chart, let's see. Oh, man, there's no example there either. Let's go to a 15-minute chart. Or the example is right in here. There's a good example of bright green. I'm going to explain what that means here in a second. But ultimately, what this is meaning right here, the green cloud, the red cloud, this is communicating money flow. During this time period, is there more money flowing out of the market, or is there more money flowing into the market, right? So green is positive flow, red is negative flow. Just so you know, though, the money flow starts going negative when the green cloud starts to drop down, right? You do not have to wait for red to say that money flow is negative. If the green cloud is descending, that's negative money flow. If the red cloud is ascending, going to the upside, that's positive money flow, right? So ultimately, the reason why I consider this the most important, let's just stay over here. The reason I consider this the most important part of this indicator is because no matter what, I do not want to buy if the money flow is going negative, and I do not want to sell if the money flow is going positive.
That's that's really good. Let me just, I like to slow down. Tim, you're an excellent teacher. Let's throw the price chart above so we can look at those two hills and kind of conceptualize where we would be if we followed that idea.
Mm-hmm.
So
for example,
can you expand the price chart just a hair so we can, and bring, All right, so go ahead. Perfect.
All right, so even though the bottom technically came a little bit beforehand, I can tell you right now, if you had been at this price action way back here, there was definitely still chances. There were still a lot of people applying negative pressure over here. What happens, though, is we start to turn positive right in this zone, where
I like that. I like that. This is looking motivating. I'm getting excited about these charts. Go ahead, man.
And then even though we dipped a little bit, you can see this is where the money started to slowly go positive, and of course, we would go on to have a very big rally to the upside. I don't use the oscillator for when I take profit, but I do use it for when I enter, and I'll show you a strategy here in a little bit. On the vice versa, this is actually probably not the greatest example of this because, of course, we top out and the money flow is still going positive. The money flow won't kind of round off until all the way down here. So this would have been a very late exit, but you can see, even though you would have caught it midway, when the money flow starts going negative right here, take a look at how much further we had to go to the downside, all the way back down here. And again, you're probably going to find some other indicator communicating support that would make you want to exit your trade. However, if the question is, man, do I want to enter right here? Even though obviously hindsight's 2020, this would have been a good area in theory to enter back in. I won't really feel good about it until I see the money flow go back positive, like right here. And even though it's not major, you can see positive price action follows with the positive money flow. This is a 15-minute chart. Let me come back out to the 4-hour chart to see more major moves here. Where are
And
my
I
price?
would
There we
tell
go.
you, I would tell you that personally, I'm not going to use an oscillator like this until I have really refined confidence on shorter time frames. I would only be looking at this on the higher time frames for larger moves
Yeah.
until I was a expert at it. So I would say that 4-hour would be like the minimum for me. Maybe 4-hour in a day just to get a general sense of direction.
Yeah, let me show you. This is just a great example. Look at the mirroring here. Let me turn off volume. That's kind of distracting. Look at the mirroring here on the.
Real quick, I got a question
Yep.
here about what we're doing here today. So, guys, let me just quickly come back. We're looking at the LUX Algo Suite. Tim is teaching the LUX Algo Suite. I left a link in the chat if you guys wanted to go check that out and get it. This is one of the indicators. There's a number of them, and this is one of the more deeper dives. We've done 2 videos before this that you can go watch on the indicators that you want to start with in the suite. This is probably one of more advanced tools, and so this is one of the more advanced LUX Algo classes that Tim and I are going to do. But it's definitely going to be in the Discords for you guys to come back to, and you can go through them all, and you can get the suite. Both Tim and I use it, and I'll tell you this, if you are new to charting and you don't have 10, 20 years of charting experience, I personally, if I could go back in time, and if I were willing to put the effort and the time in when I first started my journey and there was tools like this, and if I had someone that would teach me, I would start right there. But then I would give myself a break to learn all the patterns and candles and the oscillators. I'd give myself a break. I'd give myself 5 years, 10 years to master those. And I would have a way that I could enter and exit trades. So, this seems like it's for advanced people, but it's going to be a lot easier for you as a beginning trader to push through and learn this technical tool and to use it as your bread and butter base for making money if you're not where Tim and I are at. That'll come in time. That's why I'm doing this, because I think it's going to help people. I wouldn't do it otherwise.
Yeah.
I started with these tools in January. I told the family, give me some time. I want to play with them. It was only later on, just a couple months ago, that I said, you know what? I think these are good enough and would help people. Now we just have to teach them how to use them. So I reached out to LUX Algo and I said, if you guys will come along with me and teach the family how to use these, then I would love to do this. But without that support, I would have just passed. And Tim has been here, shining star, becoming a friend. He's a great guy, and he's putting in the hard work for us. Thank you again, Tim. Let's dive right back into where you left off.
Yeah, ultimately, and there's a lot more I want to show you guys, but look at the pattern here. I'm going to kind of draw it out for you guys and look at the mirroring levels of what the money flow looked like. And I'm going to kind of show it back. It's a very similar looking movement here. And so if you had just traded off this, you would have actually, if you had just traded off of money flow, you would have been a pretty successful trader because those pretty much mirror each other borderline perfectly. But let me show you deeper, because that's what I showed you with money flow. That is just one of the 3 major things I want to show you. I do want to go full screen so I can show you more in depth, but I'm going to count of the 3 things I want to talk about. Money flow is definitely the most important. Now let's move to oscillator flow. That is going to be the green and gray lines, if you guys can see them on here uh, clearly here. I know sometimes it's a little small, but I'm going to try to zoom in as best I can. The green and gray lines, these are similar. If anyone was used to an RSI level, relative strength index, all that's measuring with a relative strength index is the power and momentum of an oscillator. So the higher you go, in this case, it's a green line, and you go up high, this is communicating that the bulls are very strong. However, when you start to cross up above the 0 line or the 50 line, and you start to get closer towards 100, even though the bulls are very strong, just like a rubber band, if you pull on the rubber band, the farther you pull, the harder and more pressure it really needs. And that rubber band is go back towards equilibrium, right? So, yes, this is very bullish when the green comes really high. Like here's a great example here. But the higher you go, the higher the probability that the bulls need to cool off and the pressure needs to go bearish for a while. And of course, vice versa. The lower you go, the more powerful the bears are, but you start to get overextended, and the higher the probability is that the bears need to cool off and the bulls need to come back up. So, what this is communicating is where is the overall strength of the movement? Who's stronger, the bulls or the bears? And the higher you are above the 50, the stronger the bulls are, the greater the possibility is that we should see a reversal to the downside, and the vice versa. The lower you are, especially below the 50, the stronger the bears are, and the greater the possibility is we really should see a reversal
Can I
back into bullish momentum.
can I ask a question? So do you trade the trend line on the moving average there? Do you trade that? So if it came back and touched that low, would you view that as a bullish signal?
It's a bullish signal, but it's not my absolute. I'm not going to trigger on one of them alone, right? So even when we were looking at the money, it wasn't necessarily in and of itself a perfect indicator. It was good, but it wasn't perfect. And the same thing with like RSIs or oscillator movements, it communicates to you the power or the lack of power. But I don't want to just enter a buy or sell signal simply because the momentum turned bearish. There's actually a lot of times where the strength will actually turn bearish, but price action goes up,
Well,
and vice versa.
and that's
There's
that's classic bearish divergence, where
yes,
the second peak is often the highest price.
and that's just so you guys know another cool feature. Divergences. I'll show you. This is one of the cool things about LUX ALGO. You don't have to see them for yourself. It will identify them for you. If you look at the, I tried to play in settings and make this thicker. I cannot. Hopefully you guys can see this. The red lines on these oscillators are going to communicate bearish divergence, and I'm not finding. Oh, here we go. Here's one down here. The blue lines communicate bullish divergence. What we mean by this, and I know there's a lot more we got to talk about here, but what's being communicated here is if you look at these two timelines right here, notice that the peaks of the oscillators are going down, right? So that one gets all the way to 96. This one goes about 89. It's a lower high. But in the same timeline, the price tops went up. What this means is we're losing bullish strength. Even though the price action is getting stronger, we're losing the bullish strength. And this is a key signal that the bulls are running out of steam and the bears are about to take over. That's what bearish divergences imply. And then vice versa. This is an example where the oscillator bottoms got higher, but at the same timeline, the price action bottoms got lower. This is communicating the bulls are running out of control. The bears are probably going to take control very, very soon. So that's what those communicate. But coming in here, ultimately, I do want to pay attention to where the green dot flips us from being bearish to bullish, and where the gray dot flips us from being bullish to bearish. And you'll notice different sizes in the dots. What that's communicating, the bigger dots, you'll see the gray dots are bigger when the oscillator is above 80. That means, hey guys, not only are we flipping bearish, we're flipping bearish in a zone of very, very overbought territory above the 80. Notice like down here, that's a very small gray dot because right now, even though we're flipping bearish, we're not really overextended. We're not really terribly overbought, so it's less significant. On the same thing for the bullish side, there's little green dots above the 20, but any reversal that happens below the 20, you'll see a big green dot because it's saying, hey guys, we're flipping
We are
bullish,
going.
but we're
We're
flipping bullish
you're
in oversold territory.
a little slower.
Yeah, so
I'm imagining people that this is already an eye strain and
yeah,
just like an experience logic strain, and we have to
yeah.
make it. I just want to go slow. So show the price when we give an understanding of what the chart's saying. Let's show the comparative price so we can understand what that ended up being. So right there, those two peaks that we talked about with the bearish divergence. Can we move the price chart over just a hair? Yeah, so
Right
that
there.
really, the second gray dot would have been an awesome take profit area.
Mhm. Yes, absolutely. And then there's another one that plays out right here. You said that red line. There's another slight. The oscillators go lower, but the price action goes a little higher. A great level, not only just to take profits, but look for a reversal, potentially even enter a short position because the markets are just dramatically overbought at the moment and need to come back down.
Yeah, and I don't know, I know that this is not an exact science and you can't apply the logic I'm about to give to everything, but I often look for waves of three. There's often three pumps in any move. You'll get three peaks. A very bearish signal is a triple top, and if you're at a triple top and you got bearish wicking candles, it's a pretty good sign that you shouldn't be looking for a fourth pump. Only hogs are looking for a fourth pump, and you're looking at the momentum here and the peaks here. I see that playing out as well. That's just a little bit of a rule of thumb, just to have in the back of your mind.
Yes, absolutely. Now, but even though we're looking at the price chart, what I want to show you is the third level of this oscillator, and then this will all make sense, Josh, and we'll have them a superpower for when to enter and exit short. So we talked about positive, negative money flow. We've talked about oscillators, the strength of the movement, either being bearish or bullish. But now I want to show you the third one, and that is the dots and triangles that are above and below these bars here. The simplistic nature is when it's green down below, whether it's a dot or a triangle, that is communicating there should be soon a bullish reversal, meaning we're very overextended, reverse, and go back to the upside. When they're red, either the dots or the triangles, that means we are overextended and we should see a reversal from bullishness down to bearishness in the price action. Now, these are not the greatest indicators. Don't just sell every single time you see a dot on the top, a red dot. Don't buy every single time you see a green circle. There's some times where that would have been a good signal, but if I scroll back far enough, I can show you plenty of examples like right here. The green dot flashes, not a good buy spot. The green triangle flashes, it was an okay buying spot, but not a lot of bullish momentum, not that great. It was actually this green dot that ended up being a good buying spot. This one back here, actually not a terrible buying spot right there. And this one, not a good buying spot. We had a small uh, rally, but then as a whole, we traded sideways and came down. Right? So you don't want to trade simply based off of these reversal dots in and of themselves.
I want to make this point because I can already hear the wheels of people's mind turning.
Okay.
Guys, when you're wanting to have higher confirmed dots, you're going to largely see something like that on a higher time frame. So sometimes the lower time frames are going to give more signals, and the higher time frames are going to get fewer signals. And so if you are not mastering this right now, you can find more reliability as a slower trader, a slower investor. You can find a little bit more reliability on the higher time frames.
Mm-hmm. Absolutely. I came to a higher time frame just to kind of echo his thoughts. But again, here's kind of what I was saying right there, guys. This is a great example on Bitcoin's daily chart. You don't sell just because a red reversal comes into the equation. Again, all of these would have been kind of rough. You don't just buy because the green dots come in. You wait for, this is where it's going to be the superpower of the three motions. You wait for a confirmation of all three to be in play. What do I mean by that? Okay, this is, people should pay very close attention. And this is very simplistic, but very potent for entering trades, whether you're looking for longs or shorts. In my back testing, I want people to know this concept and this strategy has been profitable for me over 90%. So that's why I want to communicate just how great this little strategy is about to be. I don't enter a trade just because I see bearish momentum, or just because I see a bearish dot, or just because I see a red reversal indicator. I don't enter a short just because. But here's what I do. When I see within a 12 candle span, so my rule of thumb is 12 candles. If I can see a confirmation of all three things agree on being bullish or bearish, then I will enter that position. In this case, a bearish reversal triangle, a bearish reversal momentum dot on the oscillator, and negative money flow. All three of them came within a 6 candle span. What I'm going to do, I have all three. Boom. I'm entering a short right at that level. Before we move on, let's take a look at a previous one and see when we get a good long position, because I want to show you a good example of that. Let's take a look, because I don't like that one right here. So let's go right in. Is that 12? Is that less than 12 candles? Let's take a look here. I would say right in here. Nope, 14 candles. I would not do that one. Let's go with this one right here. Pause. Yeah, let's just go right here. This is perfect. Okay. Nope, I did not do that. This one takes place between 5 candles, right? So in both the situations, the money flow went positive here. However, I didn't necessarily feel good about where the reversal dot was. It was outside of the 12 candle rule. I like this one. I have a green reversal dot. Zoom in. I got to get rid of this now. I have a green reversal dot. I have positive money flow. And then here I print a buy signal on, or sorry, I print a positive momentum. Let me go ahead and put a line here. If I can grab that vertical line, I would have entered a long right here. Why? Because in a tight window, I got all three to be positive. Positive reversal, positive money flow, and a positive momentum. Okay, let's zoom out and let's compare what happened in the prices during this time. I think I need to go down. There we go. Perfect. All right. Take a look at, I'm just talking about entries right here. Taking profit is a different thing. I'll have to show you in a different video. But take a look at the candle I would have entered a buy signal right here. Just the candle after the bottom of the entire bearish move, I would have entered a long and had at least the potential right here of getting upwards of 20%, 21% move to the upside on a Bitcoin long. Okay, let's flash back over to my sell order. All right, look at this. It came in the candle after the top of the bull market. I would have entered a short right here, and I would have had at least a nice 14% move to the downside. Again, I'll show you some tricks in the future. If I was patient, I could have come all the way down to 20%. But I'll show you in maybe next week or the week after how to take profit. The point of this I want to communicate is when to enter. And ultimately, I want you guys during this week, if you have LUX ALGO already, take this and go back test it on some of your favorite coins. But again, 90% of the time, this ends up being a notable trade, a profitable looking trade when I find the confluence of all three. Reversals, red reversal, bearish momentum, negative money flow. That is my trigger within 12 candles. That is my trigger to enter a short, and then vice versa. If I within 12 candles see bullish reversal, bullish momentum on the oscillator, and bullish money flow, that is my signal to enter a long. That is a potent entry strategy using this one indicator.
Thank you, Tim. So here's what we're going to do, guys, because we're going to continue to build on this series. We've taught 3 of the indicators so far, and the next time that we come into the Discord, it's going to be a live Q&A, no deep dive into the technicals, but we're going to use all 3. We're going to run through them, and we're going to call them the 1, 2, 3 test. So we're going to let you guys pick a stock, and then we're going to run it through and see what is on it using these indicators so that we can get some real practical live applications. I call it money eyes, Tim. It's when you are actually in something. You have either max joy or max pain, depending on how the price is moving. So I know that this will be, if we chart using these indicators next week with people's money eyes, it's all gonna click, man. It's all gonna come together like magic. Trust me, I've been down this road, folks. So anything you want to leave the family with, Tim?
Man, there's so much I can go. I am a talker. We can go deep, as Josh had to slow me down a little bit. I look forward to you guys learning this slowly as we go. I told Josh I'll have to download the videos and get it to him. But everything I just went through, I created tutorials for my trading group and my community on how to understand what's being communicated. I created one and a 201 where I talk about the very simplistic natures in 101, the complicated in the 201. It is a tutorial that you guys, I'm going to give Josh access to it so he can give it to you guys as well, so that anytime you want to refresh yourself on what's being communicated, you guys can just go back and watch those videos. And then, of course, whenever I come on here for Technical Tuesdays, you guys can come into chat and ask some clarifying questions and grow as you go. Ultimately, the best form of education, even though learning this from me is good, it's going to be practice from you guys. So I encourage you, don't just watch the videos, learn as much as you can, and then go out and try to put it into practice. And when you come into some points where you have questions or concerns, that's when you come back and you ask those questions in this chat.
You know what? I'm just going to remind you guys, do the hard work, do the hard thing. You're either going to put the hard work in now on this investment tool so that you have more money later, or you're never going to get your money straight, and it's going to be a hard thing to face the shortages and the ever increasing inflation. Guys, let's do the hard things now. And here's the cool thing, because we are a community, me and Tim are doing the hard things with you. You're literally not alone. You can come in here, you're going to see us repeat these things, and you can ask us questions. We'll do the hard things together, and you'll be the one getting stronger. Both Tim and I love you guys. We appreciate you tuning into this, and we're going to be back. We'll do it again next week with more calls. Peace and blessings, fam. Talk to you later.